There's a bigger story unfolding in finance right now that most people aren't paying much attention to. Crypto, specifically stablecoins, is slowly integrating into the core plumbing of the traditional financial system. This is happening is the market for US Treasuries. First, a quick explanation of stablecoins. Stablecoins are digital tokens designed to maintain a fixed value relative to the US dollar. The basic idea is simple: one coin equals $1. When someone buys a stablecoin, the issuer takes the dollars and holds reserves to back it. Those reserves are typically invested in very safe and liquid assets, especially short term US Treasury bills. That structure has created something pretty remarkable. Crypto companies have quietly become major buyers of US government debt. The stablecoin market today is well over $200 billion. To maintain their dollar pegs, issuers like Tether and Circle invest a large portion of their reserves in Treasury bills. Tether alone holds well over $100 billion in treasuries, which actually makes it one of the larger holders of US government bonds in the world, larger than the holdings of some countries. What this means in practice is that when someone anywhere in the world buys a digital dollar on a blockchain, that money often ends up financing the US government. In other words, stablecoins are creating a new global pipeline into the treasury market. A trader in Brazil, a startup in Nigeria, or a crypto investor in South Korea buys a digital dollar, and the issuer turns around and buys US government debt with those funds. That's a pretty significant shift in how capital flows into the US financial system. For decades, the main buyers of treasuries were central banks, foreign governments, banks, and money market funds. Now, stablecoin issuers are becoming another structural source of demand, arriving at a time when some traditional foreign buyers have been reducing their holdings. As stablecoins grow, they effectively channel global demand for digital dollars into demand for short term treasury bills. Some researchers believe this steady buying pressure is already helping support the market for short term government debt, but there is also a potential risk embedded in this system. Stablecoins promise that users can redeem their tokens for dollars at any time. If confidence were ever shaken and large numbers of holders decided to cash out simultaneously, the issuers would need to produce cash quickly. The easiest way to do that would be selling the treasuries backing those coins. In normal conditions, that isn't a problem, but if it happened rapidly during a period of market stress, those sales could add volatility to the short term treasury market. That's important because the treasury market sits at the center of the global financial system and plays a major role in determining short term interest rates. What makes this especially interesting is that it shows how crypto markets are beginning to influence traditional financial infrastructure. Stablecoins started as a tool for traders who wanted to move money around crypto exchanges quickly, but over time, they have evolved into something closer to a global digital dollar system. And the integration doesn't stop there. Policymakers and financial institutions are increasingly exploring ways to bring blockchain based assets into the regulated financial system. Banks are experimenting with tokenized deposits. Asset managers are launching tokenized funds that hold real world assets like treasury bills. Payment companies are exploring blockchain settlement networks. Even governments and U.S. states have begun discussing frameworks for regulated stablecoins or other forms of digital dollars. Rather than trying to eliminate the technology, the trend increasingly looks like an effort to incorporate it into existing financial structures. All of this points to a broader shift that's easy to miss if you only think about crypto in terms of price swings and speculation. Underneath the surface, the technology is gradually becoming part of the infrastructure of global finance. Stablecoins may have started as a niche tool for crypto trading, but they're increasingly functioning as a new distribution system for the US dollar and, by extension, a new source of demand for US government debt.